A new report from Desjardins is taking a closer look at whether Canadians can expect any meaningful relief from food inflation in 2026. To help us unpack the findings and what they could mean for consumers, we're joined now by the report's author, LJ Valencia, an economist with Desjardins. LJ, thanks very much for joining us.
Pleasure to be with you today.
Overall, what are we looking at for when it comes to food and inflation? What are we looking at for the next year?
So I suppose in the near term, we do anticipate food inflation to remain elevated relative to pre-pandemic norms. And so the main driver we believe for 2026 will be the prices of food purchased from stores. That said, we do expect to see some outsized contribution from the prices of food purchased from restaurants, which will be slower but still sustained. And part of this is really motivated by base year effects stemming from the GST HST holiday from at least a year ago. And that said, we do expect price growth to likely stabilize as factors such as input costs and wage growth gradually normalize.
And now, just going back for a second, you said since the pandemic, what has been driving the cost of food? What has been driving it up? This has been going on since the pandemic, you're saying?
Well, since after the end of the pandemic. And so there's a myriad of factors that sort of put this overlapping pressures on food prices after the end of the pandemic, such as supply chain disruptions. There's been growing input costs. And last but definitely not the least, extreme weather events due to climate change, which have been affecting the food supply stability that we've used to expect before the pandemic.
How bad has that been getting? Do you have any stats on that? Have we seen more extreme weather incidents?
Well, there have been studies that suggest that, extreme weather events have been rendering global agricultural supplies unstable, as we've cited in our report. And so there's definitely evidence that points to that. That said, we don't necessarily have a full quantitative factor, but we do expect extreme weather events to be an upside risk to price growth, especially if, say, for example, there's, droughts in the summer that will cause, domestic and international food supplies to decline. And we have seen this happen in the past, say, for example, back in 2021, when extreme droughts have affected domestic agricultural supplies.
Okay, and then now looking ahead for 2026 again, let's just break it down a little more. First half, we're still going to see pressures. Where will they be coming from? And any indicators on how much pressure?
Well, at the moment, it's kind of roughly balanced, but in the near term, we do expect food purchase from restaurants to drive much of the food prices moving forward. But still, for much of 2026, food purchase from stores will make up a much more outsized contribution to food CPI. Now, if we look at this in the context of the overall headline CPI, we do expect a contribution of roughly 0.5 percentage points in 2026 and 0.4 percentage points in 2027 for food inflation in general.
And is this the fuel costs that are driving this, seed costs, wages?
Well, there's a myriad of factors that influence, our current outlook. I think a lot of it comes down to the fact that we are a small open economy. And so we don't really have a lot of say or influence in the prices of goods that we import into the country. And so, for example, that leaves us vulnerable to, say, for example, the depreciation in the Canadian dollar. While that may be good for imports, that has partially contributed to rising import costs.
And are there sectors harder hit than others?
Well, that's a little bit more difficult to say, but I think what's really important to emphasize is that, for example, households have been struggling with dealing with food inflation. Say with the latest data that we've had from StatCan, roughly 1 in 5 households have been facing moderate or severe food insecurity. So I think it's really important to also put that into context.
And so are people? So when I asked about the sectors, I meant like dairy or a farm or meat, things like that. Are they being harder hit than other groups, or is it across the board for the different sectors within the industry?
I think it really depends on, say, for example, the sort of price pressures that these particular sectors face. But for example, for sectors that heavily rely on like fresh food imports and inputs, that's really what's critical and vulnerable, I suppose, when it comes to facing price pressure, so to speak.
And with the consumer that you were just talking about, are they changing their spending habits? Are they foregoing things or shopping in a different way or changing stores or anything like that?
Yeah, that's a really good question, and thank you for raising that. Now, there seems to be some evidence that suggests that a lot of Canadian households are adapting and changing their spending habits. There was a recent Bank of Canada research report that looked into this, and the evidence that they found seems to suggest that's to be the case.
Okay, LJ, we have to wrap it up there, but thank you very much for joining us.
Thank you again for having me.
LJ Valencia is an economist at Desjardins.